right, we got Patty and Larry here at Texas Blockchain Council. You guys here at Consensus, and we're talking a little bit about what you guys have going on in the financial services business and how that intersects with blockchain technologies, more of the traditional finance, along with newer technologies.
Yes.
So
go ahead.
Talk on it.
Where do you want to start? So what we've been doing at Strategic Resource Management, SRM, is where Larry and I work, and we've been focused. Our company's been around for 30 years. We've been helping financial institutions with their third-party relationships like Visa, MasterCard, core vendors, things like that. And we saw early on that this whole new cryptocurrency, digital asset, blockchain was having an impact to the financial industry community. We wanted to help educate them, help figure out what the space is, how it's affecting finances, build out use cases, find out who the right third-party vendors are that they should be working with, how to work with their regulators. And that's most of this last year has been definitely on the education piece of it, which obviously Texas Blockchain Council does a lot of the education. We focus specifically on the financial industry and how they're impacted by it.
And now, are you when you say that you're researching, are they coming to you asking you specific questions? Are you trying to stay ahead of it? Where is that conversation starting?
So a little bit of both. So we do broad education on the industry, but then we've got specific clients that we're helping develop digital asset solutions for their marketplace. So for their customers, for their members.
Okay, and what type of you go into a little bit about what type of products?
So most of those products are buy, sell, and hold, mostly a custodial relationship through a third-party vendor. We're starting to look at self-custody solutions as well, but the entry point for banks and credit unions are coming up with a buy, sell, hold solution so that those customers' deposits aren't going out to the Coinbases and the Krakens of the world. They want to maintain that relationship and maintain that revenue that they're missing out on today.
And I think it's also an area where we're starting, as it progresses, understanding blockchain and how that impacts the financial institution, even from back office efficiencies, and being able to minimize costs and speed up transactions in real estate. If there's a real estate loan, it can be done much quicker, less intermediaries, all out in the open banking. And that's really impactful. It's impactful for the financial institution, but it's also very impactful for the consumers and everyone in that ecosystem.
How do you see the banks and the institutions managing risk right now with the FTX, all the issues that have popped up? What appetite have you seen contract, expand?
Yeah.
So the risk is really one of the things that's been addressed a lot by the regulators. So we've seen a couple of joint letters from the OCC, FDIC, and
NCUA.
And NCUA, Treasury. A number of joint letters have come out for the financial institutions warning them about the risks of cryptocurrencies and digital assets specifically. In the case of banks, they have not been permitted, but they've been highly discouraged from getting involved. In the case of the regulator of credit unions, which is the NCUA, they've been much more supportive. But from a risk standpoint, it's really looking at the third-party vendor relationships, because most of these financial institutions, particularly if you're a Tier 2 or Tier 3 institution, you don't have the staff, you don't have the knowledge to create your own custody solution, your own trading solution. You need to go to the likes of a NYDIG or a Cryptify or a BAC to roll out those sorts of solutions. From a bank or credit union standpoint, to manage the risk associated with that, is looking at that vendor relationship and all of that vendor's third-party relationships to make sure that everything is buttoned up from a due diligence standpoint. When we conduct a due diligence, we do an RFP. We've got 175 different RFP questions we're asking those vendors. Everything.
Now you have to forgive me and the audience. RFP, what do you mean by RFP?
Okay, request for proposal.
You have to take it all the way down.
Yeah.
So request for proposal.
So request for proposal. So when you've got a bank or credit union looking at partnering with a provider to provide, say, digital asset solutions to their customers, they're not going to do that directly. They're going to do it via a vendor. So they will conduct a request for proposal. They'll send that request out to a number of different vendors. All those vendors will bid on that opportunity.
Okay.
Yeah.
And so right now, are you seeing an expansion of that? Are you seeing contraction of that?
I would say it's cooled off a little bit.
Okay.
And part of that is really the narrative that they're hearing. They're hearing that the bank failures, that FTX, that all these things that happened in the last year has made them a little concerned. And, if you asked a group of people,
You were talking about this a little bit earlier off camera.
yeah, so I was recently did at a speaking engagement where I asked a room of people, there were probably 50 people in there, if to raise their hands if they thought that the recent bank failures had anything to do with crypto, and every single person in the room raised their hands, and it's so unfortunate that we don't have enough time to read all the articles, but we see these headlines and we see bank failure, crypto related bank fails, and nobody's reading into the details of actually why. And if you do, then it makes a lot of sense. And actually, if the blockchain was doing what it was designed to do already in place, we would have seen those failures coming way earlier. And that's unfortunate.
We do know, though, behind the scenes, particularly large banks continue to work on this. JP Morgan has their Onyx division. Internationally, all the central banks are working on central bank digital currencies. A lot of that's being led by the Bank for International Settlements. So while there is bad news out there, particularly on the retail side of things, on the back end, a lot of corporations, a lot of banks and credit unions are working on implementation solutions, understanding technology. And one of the things that's unfortunate and people don't realize is that banking has had an opportunity to evolve over 400 to 500 years.
Right.
And we've had lots of failures and lots of successes. Digital assets have had their evolutionary period has been 14, 15 years.
Right.
So it's a lot more.
It's not already solved. It's supposed to already be solved by now. It's supposed to be perfect.
Right.
It's not perfect. And the media tends to, it's that whole idea of it bleeds, it leads. The media tends to focus on the negative aspects of it, not the positive aspects of it.
Right. Well, whatever gets the clicks and the eyeballs, right?
Exactly.
So, I do think we talked to a few yesterday, financial institutions that are upstairs who don't want to be named, who do not want to be on camera.
Right.
But they do have representatives here. They're continuing to do work with it. So it'll be interesting to see the evolution.
And they could be proactive or they can be reactive. So an example of real estate, there's areas where the real estate community is starting to adopt a lot of this technology. At some point that connects back to a financial institution and it changed some of the processes on the backside. And we want to be able to offer them that education and that help either way.
Yeah. Do you see the states moving quickly? Do you see some states moving more quickly than others?
I don't know if it's a state by state.
I mean, from a regulatory standpoint, there certainly are some states that are more pro, like Wyoming and others.
Right.
New York obviously has a very defined regulatory regime. So, yeah, I'd say the states have moved faster than federal, but at some point they're going to get aligned.
Right.
And we'll see some opportunities there. One thing we are seeing a bit of a shift in our clients is not just as much interest in a pure digital asset offering, but more a self-directed investing option. So instead of just offering, say, Bitcoin and Ethereum or some other sorts of digital assets, is going out and having a solution much like a Robinhood type solution where they can go out, their customers can go out and buy equities, they can buy bonds, they can buy digital assets, and ultimately they can buy tokenized assets. And we think that's where the future is kind of that combination of traditional assets with digital assets and the banks kind of servicing that.
But
you just made a bunch of centralized finance people not so happy.
But the basics of it is it comes down to the fact that financial relationship you have with your bank or your credit union is not just on a payday. There's a Sunday afternoon when I'm watching a basketball game and there's an ad for a QQQ fund, and I jump on my app and I open it and I put $50 in it, and I'm doing that on a Sunday afternoon. Or I owe you $5 for coffee this morning.
Yep.
How do you want it? Cash App, through our bank, through our, there's a lot of ways. And so financial institutions have to really start understanding you are not just your checking account, savings account. You are all these other times of days, 24 hours, 365, where finances are being exchanged. And that's commercially, that's retail, that's all these different areas, and they need to be more part of that conversation.
Well, you were talking about earlier. Apple rolling out their savings account. It's one of those things where it's the relationship with the client and being able to service the client's needs.
And multi-products. So that Apple release was a high-interest savings account. You have to have a credit card in order to get it. And so right away you got the credit card, you got the high savings account, and for me to use it, now I'm top of wallet.
And now you're in the App Store.
And now you're in the App Store.
You got the little ecosystem.
And they're not a registered bank.
And it's frictionless, and the players that are going to win in this business are going to leverage that frictionless. They're going to have to figure out how to act and look more like a fintech. And one of the best ways to do that is partnering with fintech providers and leveraging the technology that fintechs are leveraging, like blockchain.
Yeah, there's I think some we were talking about this a little bit earlier, but companies get stuck in their model for managing risk, their model for expansion. And what are some of the things that you see right now that are risks for institutions that they're not seeing? They do see the regulatory side, the regulatory risk side. They do see some of the leverage blowout and some of the other things. What are some risks that financial institutions are not aware of that they should be aware
If they're not looking at their outflows, then they're risking the deposits, leaving their institution. And so looking at their outflows means their customer base or their member base is sending money to Coinbase or to Robinhood or to these external areas. That's money that's going out of the financial institution. It's going to be really hard to get that back. What other things would?
One of the biggest ones is reputational risk,
Right.
And that's one that's
Reputational risk?
Reputational risk, yeah.
Okay.
I mean, again, if they
dig into that a little bit.
yeah,
So
if they partner with a third party to provide any sort of digital assets, or they implement a blockchain, whether it's through like a Tacit or something, which is kind of a commercial blockchain, and something goes sideways, it's their reputation. And reputation is the most important thing that a bank or a credit union has.
Right.
And so that's one of the things that can sometimes prevent them from moving forward with something is just that reputational risk. So they have to be really comfortable with their partners. Like most of the partners that banks have today have existed for 30, 40, 50 years. They're the FISs of the world, Fidelities, or the TSYSs of the world, NCRs. They're very familiar with those companies because they've existed a long time. These digital asset companies are all new, so they have to get comfortable with them and know who are going to be the ones that are going to be here in 10 years and who are the ones that are going to disappear. The ones that are going to disappear provide some reputational risk to those banks and credit unions.
Gotcha. Anything else? Any other risks that you think that they should be aware of?
I mean, not doing anything is a risk.
Yeah.
Which kind of goes back to the reputational part of it is if you have a younger demographic that wants to see if you're crypto friendly and you're not, that's a risk that you're not going to have that acquisition as a customer. But it's not just a younger demographic, it's a digital demographic. And being in the places, like I said before, where that money is transacting, if you're not in those places, you're outside the circle.
Yeah, and we think about demographics. In the next 10 years, the baby boomers are going to die off, and that money is going to be the largest transfer of wealth the world's ever seen is going to transfer to the younger generation. The younger generation is a pure digital. Like they like those digital relationships. They like dealing with their fintech providers. Banks and credit unions have not been real successful at capturing them. If they don't provide the same services and the same sort of support and the same sort of customer experience that they are used to getting from an Apple, they're not going to get that experience, that relationship. So when they get that wealth transferred, that wealth is going to go to the products like the Apples and the Twitters and whatever.
Elon understands that. That's what he's building into Twitter. So he's building it into Twitter.
Payments.
Apple seems to get it. They're building it into it.
Yep.
So the financial institutions, like you said,
Right.
They can stay where they've always been, but
And
dinosaurs die off.
And part of that, and so it's funny that you say that because part of that challenge is a lot of the board members that maybe sometimes dictate what that bank or that credit union does.
Yep.
So you have people who are much, much older, who've been in the traditional finance for a very long time, and it's really hard for them to understand this new evolution. And they're dictating what these banks and credit unions are doing right now, and that's unfortunate. So not only do you have the regulator that's hindering, because a bank CEO or a credit union CEO may want to do any of this, but if they have a regulator or they have a board member that are saying, no, don't do it, their hands are tied.
Yeah, I like your example earlier that we were talking about transactions happen all the time.
Yep.
They don't just happen between 9 to 5.
Right.
And the idea that you have ACH settlements that'll take 2 to 3 days to settle, or
Cross-border.
you get
Your
the
wire
friction.
that's been lost.
You get wire that gets that's
He's
held
got
up.
a wire right now
I've got
that's
a wire
lost.
that's been lost for 2 weeks, and I'm like, I should have just sent it Bitcoin. Like,
Yeah.
The ability to be able to do commerce 24/7. So what we forget sometimes in the U.S. is that, and even with Fed now that's going to be rolling out in June, is that our transactions are not just domestic. We do business all over the world. We all do. I buy stuff internationally. And that ability to transact 24/7, 365, regardless of the time zone, regardless of if a particular country has a bank holiday, we've come to expect that immediate
Instant
transaction.
settlement.
And so that's really important. That's what blockchain solves.
Right.
And a lot of people don't realize that. And we have to adopt those technologies if we want to be able to provide that service in the future.
Yep.
Excellent. Where do you see the path forward now? How do you see things progressing over the next 6 to 12 months? Slowly. You're talking primarily with credit unions and banks?
Banks and credit unions.
Okay.
But we also talk with the regulators too. And I think a lot will depend on what happens in Congress, what gets passed or not passed. What's happening in other countries may have the United States react more quickly or slowly. So there's a lot of moving parts. A year ago, things were moving very quickly. Then a few things happened in the news and things kind of slowed down a little bit, which sometimes gives everyone an opportunity to go, okay, let's level set, let's understand this, let's get more educated on it before we make quick decisions. When COVID happened, financial institutions had to make very quick decisions on technology, things that they would have normally taken a year or two to decide on, they had to do in literally a couple of months. This is something they see coming. They have an opportunity to educate from all sides of their financial institution, get input, find out what's going on, be educated, be reactionary, but also proactive. And it's a delicate balance between all of that and comply with your regulator.
Yeah. It's the lack of clarity and the challenge of navigating that.
And where's your crystal ball? Where's it headed?
Where is the crystal ball? Something can look like a stupid move right now, and then you can look like a genius in 3 years.
Right.
Or you can look like a genius now and be looking for a job in 3 years.
It's the roll of the dice.
So figure out which one you want to do. Did you guys just switching topics a little bit?
Yeah.
Did you enjoy the grilling of Jay Powell
Gary
Gary
Gensler.
Gensler.
on the?
My own personal, I think he handled it very well. Congress does a lot of that, or they pull people up in front and they give them.
It was just grandstanding, right?
It's just grandstanding. I don't know if it solves anything.
Yeah.
I mean, he was under oath, by the way.
Yeah.
And for anyone that forgot, he was supposed to be
I'd like
under
to
oath.
think, I mean, he's a bright guy. I'd like to think that his heart's in the right place. There is a lot of regulation by enforcement that's happening. And part of that's because we've got a divided Congress. So we really need Congress to act on things like stablecoin and other sorts of digital assets. We need to get that guidance from Congress. Until then, all we have as an option is for regulatory agencies to regulate, and that's what he's doing. He's doing his job. I'm not fond of the approach that he's taking, but he is doing something, and I think it's going to force some of the industry to maybe get to play better, get their act together. Unfortunately, there's also the risk that we're going to push good industries offshore, and that's a real risk that I would hate to happen.
And other countries are figuring it out. So we're just getting further and further behind.
Someone was talking yesterday about the Swiss are good at regulatory arbitrage, and a lot of companies are starting to just say it's not worth to be in the U.S. So I mean, if that's I heard that multiple times, multiple companies that are building stuff out, that it's why deal with the U.S. It's global. It's you can we've had our hegemony on policy and for a while, but at this point, if it doesn't have to run through the U.S. banking system, if
They try to avoid
stuff, that before there's one entrance, one exit, and you can guard that one entrance, one exit. Now there's lots of entrances, lots of exits.
Yep.
And you're trying to keep the same.
Our
policy.
window is getting smaller.
Yeah, so it is sad to see some of those companies move over and that talent, move offshore.
I think if the SEC streamlined their process, that would go a long ways to fixing things. It's one thing to register with the SEC. It's another thing to get approval. If they could streamline that process and speed up the approval process, then we could compete with the likes of Bahamas and other jurisdictions that have the same sort of registration process, but they've got a much more streamlined approach to getting you through that process.
How much do you think that's a inefficiency from the agency due to politics, and how much of it is from a competence standpoint?
I wouldn't say it's competency. There's probably some political aspects of it. The other thing is, our agencies, there's a lot of different agencies that share kind of regulatory jurisdiction, and that complicates things. Other countries will have one regulatory agent that will handle digital assets, and that's what we're seeing in Europe with the MiCA, and other jurisdictions that are coming up with one regulator. And I think our country would benefit from going that direction, or at least finding some way to kind of normalize or centralize that approach.
Yeah, I think the big challenge right now is you have different regulations that cross over different areas. And so you can't just pick one. You can't just pick the SEC. And so now the question, then we were talking in a group the other day, was, do we need a brand new regulator? And do you pull one person or, groups of people from each area to become this new regulator so that it's appropriate, as opposed to trying to, stick a round peg in a square hole with these legacy policies that don't relate to what's happening now. And that, that could be the results of it.
Excellent. Wait, now you guys are involved with the Florida Blockchain Council?
Talking to them, yes.
What do you see as what's kind of pushing that there? Where do you see the role of state-led blockchain council?
Yeah, I think it's just another avenue where you have all these industries that somewhere along the way, money is exchanged. Mm-hmm. And so the financial community, whether it be real estate, whether it be retail, whether it be, it can just be anything. Somewhere along the line, money is exchanged. Government, healthcare. And so financial institutions should be part of that, because, again, it's either being affected by it or it could be a leader in it. I live in Florida. That's why I was talking about the Florida blockchain and trying to see how we can help this. I mean, Larry and I are both passionate about just this all moving in a good direction and helping any way we can. And I think that's just pulling in one of those pieces to this whole ecosystem.
So just do it on a small level.
Grassroots efforts.
Grassroots effort. Do your
all
do
this
your
stuff
bit
is
to help
going to be.
move the ball forward.
Yep.
Anything that we didn't touch on that you want to make sure that you touch on?
No, this is my first consensus, so I think I did go to Bitcoin last year, and down in Miami, and it's similar to that, maybe a little bit smaller.
I think if you go to one, you're not allowed to go to the other. Is that how this works?
Well, I told Larry he should go this year. We're actually speaking at a Fintech conference in Orlando that same week, so I think that's why we're not going this year. But yeah.
Excellent. What is your favorite topic to talk on? When you're doing these, you got a bunch of different speeches that you can get, avenues that you kind of go down.
My favorite would be I was doing a presentation for a credit union board. A credit union, just a whole different operational, different areas, and they wanted to keep that conversation very proactive. They talked about metaverse, branches in the metaverse. They talked about Web3. They talked about AI. They talked
recently?
about it was in last couple months, and up in the Midwest as well.
In the Midwest. A credit union.
Yep.
They were hard to believe. I get it as well.
So that was really fun, because I won't go there if they're not ready. But if a group of people are asking questions or saying, what about this? What about that? I mean, think about the self-driven cars. If you are an institution and you do a loan on a car and that person defaults on their payments, you can just automatically have that car drive it back to the dealership. I mean, they're just smart contracts. You just blows people's minds. So it's really fun to go there when people have their brain, their imaginations open to it.
I'd say my favorite topics are probably central bank digital currencies, stable coins, and tokenized deposits. Because a lot of times people don't want to understand some of those differences, and they're going to be impactful for traditional finance probably in the next 5 years, seriously impactful, whether it's retail payments, whether it's bank-to-bank transfers, whether it's international. And, private cryptocurrencies are still going to play a major role, but certainly stable coins, I think, might play a larger role, at least in retail transactions.
And tokenizing real-world assets. That's going to be another new
topic to talk about.
It'll be a buzzword.
It'll be something that's realized over the use case for NFTs.
Yes.
Not
just Bored Apes.
Not just Bored Apes.
But title to a house.
Title to a house loans.
Of course, we like we love blockchain, or blockchain. We love Bitcoin. We like layer twos. I mean,
So
the
we
Lightning Network,
Chat
all of that
GPT and
stuff has
AI.
huge
Let's
opportunities.
do it all.
So that was just like talk the entire conference.
Right.
But, so yesterday we had somebody that we're talking, and we do a lot of interactions with legislators, and you talk about some of that older demographic, and it's surprising. We've had legislators, they think that Bitcoin is a CBDC, so that's tied to do. So they're fighting anything that's Bitcoin related, Bitcoin mining, anything on the energy side, because they're like, well, I hate CBDC, the idea of a CBDC,
Right.
and so I'm going to fight Bitcoin. And it's like,
That's
okay, we're starting from you talk about
Yeah.
that education piece.
Yeah.
I'm like, we're starting from ground zero.
right. And that's a slide we literally have this is BTC. This is altcoins. This
But they're
is
the
a
same
stable
thing. It's
coin.
just
This is
one, you just
CBDC.
use Bitcoin for everything, right?
No, it's not Kleenex.
Yeah. I think
can't use it for everyone.
the term actually was used. So Bitcoin's just like Kleenex. Right?
No.
But no, we have some great people that are very well intentioned that help us on the state level,
Awesome.
and so I think that there are some there are people that are really working hard to push things forward. They just may not know it, understand the technology of it, but they are well intentioned. And there are some that are not well intentioned.
Yeah.
They just want
Right.
they just want the credit. As one person put it, they want the credit after they burned down the house of building back the house.
Right.
A certain senator comes to mind. I think that
There's a few.
won't name names.
no names.
There's a few we can certainly turn off and have that conversation. But excellent. Thanks for you guys. For
Thank you
stopping
so
by.
much. Thanks for
Christopher,
having
How
me.
can people
for
get a
having
hold of you? How do they?
Strategic
you.
Resource Management, SRM, is our company, srmcorp.com. We're both on LinkedIn. Larry's more active. I try not to get on LinkedIn. I need life balance.
Yeah, look up Larry Pruss on LinkedIn,
Yeah.
PRUSS.
Yeah.
But Christopher, we appreciate everything you're doing at Texas Blockchain Council. You guys do great work, and really appreciate you guys letting us have a voice.
Well, thanks. We really appreciate you guys stopping by today.
Yeah. Thank
All right.
you.
All right.
Hey guys, thanks for watching. We had a great time here at Consensus. At the Texas Blockchain Council, we are striving to be the nexus between traditional industries, banking, finance, legal, energy, and the digital asset industry. So we want to help you get your brand in front of those kinds of companies with B2B opportunities. Reach out to us if that's of interest for membership or for sponsorship at the summit. Hope to see you there in November in Fort Worth. Thanks again. We look forward to seeing you at the summit.